Welcome back. You're watching Commodity Champions. Let's now shift our focus to the crude oil prices, which are headed for a monthly gain of around 6%. Improving U.S. demand, a fall in inventories, and escalating geopolitical tensions have been pushing prices higher, which are trading at a two-month highs. We also put spotlight on the renewable energy opportunities and, of course, India's import of LNG, which has been on a rise as well. Joining me now to discuss this further is Joel Hanley, Global Director, Crude and Fuel Oil Markets, S&P Global. Joel, hi, thank you so much for joining us. First of all, on the crude oil prices itself, 6% of a hike. What do you see as a major reason for this run-up?
Well, the geopolitical tension that we've seen over the last 6 months or so doesn't really seem to have impacted the price particularly. We saw the October 7 attacks in Israel and Gaza, and since then, of course, there's been further geopolitical unrest in the Middle East. But I think there's been a cushion. There is clearly enough supply to keep a dampener on prices. However, we are seeing a bit more demand recently, and I would say those geopolitical tensions are increasing. We've seen further attacks on shipping in the Red Sea just this week, and there does seem to be an underlying sense of strength that wasn't there a couple of months ago.
Well, and looking forward as well, the third quarter, the expectation is that the demand will improve. We perhaps could see a deficit as well going forward. What's your sense on demand, supply, prices for the third quarter?
It's an interesting picture right now. I mean, the supply-demand balance in oil is always interesting, but S&P Global Commodity Insights analysts still see the price for the year being between $85 and $100. However, the OPEC cuts and the revisions to the OPEC cuts does add a different slant. It'll be interesting to see over the next year whether OPEC will turn the taps on and go for something of a market share strategy, as we saw 10 years ago. Let's not forget, 10 years ago they tried to knock out US shale production and failed. And that strategy wasn't seen as much of a success for OPEC. But since then, OPEC now has its OPEC Plus allies as well. So I think there's a greater sense of market influence that organisation can have. So considering that the three of the largest suppliers in OPEC, they being Saudi Arabia, the UAE and Kuwait, they're holding back about 5 million barrels a day. Now, if they come on market quite quickly, then of course I wouldn't consider that to be bullish for the price.
How would you, I mean, as you said, you expect demand to improve going forward. So when we look at Asia, while the China data is still uneven, how are you looking at the Indian demand going forward? And overall Asia, what's your sense?
Indian oil demand growing within the next 5 or 6 years to about 5.5 million barrels per day, so up about 1 million barrels a day from where we are today. I would expect to see Indian demand growing fairly steadily this year, maybe slowing down for the next two. That's the view of our analysts here at S&P Global Commodity Insights. China, as you say, uneven, but always the one to watch. Everybody's always watching China when it comes to oil prices, obviously. But I think that there is a bit more volatility in the numbers that we're seeing out of there. So that will be the big surprise factor one way or the other. But I think it's too early to tell. Okay.
So a final question, and this is on geopolitics. I mean, you started by saying that the reason we've seen prices go up is because of geopolitics. I mean, is this one thing, one area that you would keep an eye on going forward as well? And is this that would impact the prices ahead?
Yeah, the map of global trade flows has been upended since the last 2 years, right? Since Ukraine was invaded by Russia, and of course, yes, there's the further conflagration in the Middle East. I think Putin's visit to North Korea recently signals that the Ukraine conflict isn't going away anytime soon. And of course, one of the major advantages, one of the major opportunities of that conflict, particularly for India, has been the huge supply of cheaper Urals crude oil coming into the region. Now, Russia supplies around 40% of India's crude oil, so that's been an exciting development for India as it tries to develop even further its international energy markets. I would also say that the OPEC situation, of course, will influence India's buying choices. They're a major buyer from Iraq, of course, but also those other three countries I mentioned earlier, Saudi Arabia, United Arab Emirates and Kuwait, major suppliers to India. If they turn on the taps, then India is really well placed to benefit from as a swing buyer from all around the world.
All right, that's good to hear. And as you said, $80 to $100 a barrel of a range is what you can see in third quarter. I mean, that's huge, and that's quite on the bullish side as well. But Joel, thank you so much for joining us and making sense of what's happening in crude oil prices. Let's